If you're making serious income, then filing a tax return isn't going to be enough for you. No, you probably need a plan. But what I hear from a lot of clients is their CPAs don't offer tax planning. And that's where their problem starts. Hi, I'm John Strohmeyer with Strohmeyer Law, where we help our clients leave no unfinished business. While I am a lawyer, I'm not your lawyer, so don't take the advice of some talking head on the internet. Make sure that you've talked to your own advisor, whether it's a CPA or an attorney, about your specific circumstances. Also, remember to like, comment, and subscribe. Now, today we're going to be talking about how to get year-round tax planning from your CPA. This is going to fall under our potential avoidable costs as part of the four horsemen of the estate planning apocalypse. Why? Well, if you wait until tax season or you never ask at all, well, it can lead to bigger tax bills than are necessary. So let's start with it. Why are you not getting the tax planning you think you need? There's a difference between tax prep and tax planning. Tax preparation generally is just going to be the compliance work you have to do every year. You're filing a return accurately and on time to report what happened in the year before, knowing that you're going to have to tell the IRS basically everything that happened with you financially in the previous year. No, there are no special trusts that are going to exempt your income. None of this is going to include magical trusts from the rich that will exempt you from everything. Those aren't the secrets when we come to the tax planning, because that tax planning is going to be the strategic work that's looking forward to reduce future tax liability. And so a lot of CPAs may only do that prep work, the tax preparation, the compliance work, unless they've been specifically engaged for tax planning. And here's the thing, you're going to need to make sure that if you've got a CPA, you're asking them, which part of this are we doing? Is it just the tax compliance, or are they including the tax prep as well as that tax planning? Make sure you're clear with them. Their engagement letter is probably going to spell it out. Beyond that, if you're just giving your documents to your CPA in March, it's probably too late for them to do anything for the last year. They're just going to be able to plug in the numbers and they can't plan. It's history. So, because planning isn't part of most standard engagements, you need to make sure that that is included in your 1040 prep letter if you want that. Again, making sure tax planning is part of the representation agreement that you have. Feel free to ask specifically about it. It may require a specific scope of work and it may be billed hourly or on a flat fee. Again, it will depend on your particular CPA. Now, many CPAs are going to wait for clients to request it, so you may have to initiate. Again, this is on you to be sure you're getting what you need. Another thing to think about is if you're in a high income household, well, a lot of times you're going to outgrow basic strategies. While there's not a hard and fast rule, once the household income gets over $180,000, the truth is you've likely phased out of a lot of simple deductions. And so these strategies that are going to be appropriate for you are often going to require more time, custom analysis, and sometimes multi-year thinking. Again, this is not something that they're just going to come up with on the fly. They're going to need specific time to think about what works for you and how best to do it. Again, this means that the planning process must be intentional and ongoing. It's not an accident, and it's not something that they're just going to say, oh, well, here you go. So, what is this year-round tax planning actually going to look like? Well, it's going to be proactive and it's not going to be reactive. This means you're not meeting after January 1st for the prior taxable year. Ideally, you're going to be meeting throughout the year. And things that should be coming up are big life or income changes. Are there timing of bonuses or liquidity events in your life that you can help either accelerate or delay? That's going to make a big difference for you. Think about your investment gains and losses. Is there anything that you can do to take advantage of that? Sometimes this is called gain harvesting or loss harvesting. You're looking to offset a loss by taking some gains that you may already have, or vice versa. Finally, thinking about your own business profitability and structure. Planning, again, is going to look at not only the current year, but future years so that you're putting the pieces together. It's an ongoing process that you want to think about. Next, this is a process. As I just said, it's not a one-off meeting. So think of it as possibly quarterly or semi-annual reviews, even if brief. These sorts of quick meetings to make sure that your CPA knows what to think about. Because what you're going to do is update based on changes in circumstances. Here it is, the end of July 2025, and we had a tax bill that came out just a few weeks ago. Well, we're all still learning about it and what the opportunities are in there. Who knows? You may restructure how part of your payment is structured because there's a new provision in that bill that allows certain payments to be treated as non-taxable if they're there for example, repayment of student loan debt. Well, why wouldn't we want to reschedule it that way? So, thinking about it that way, and things to think about. Perhaps in quarter 1, you're going to analyze the last year and set new goals for this year. Quarter 2, you'll project the income, knowing what's happened already, and maybe adjust your withholdings. Quarter 3, you're going to spot check your estimates and then plan for any fall strategies. What's left that we can do with the rest of the year? Finally, as quarter 4 starts, what you're going to do is lock in your decisions and see if there are any last minute things you can or should be doing to get yourself in the best position for when reporting season opens in January. Now, the other thing you're going to have to think about is not just the planning, but making sure your CPA knows what to be thinking about. So, you're going to need to think about information you should be sharing early and often. Because if your CPA doesn't know what happens, then they can't help you plan effectively. So, things to think about or information to have for them: real estate sales or purchases, business changes or new ventures, potentially options or restricted stock units that may be vesting or coming to you. You may want to consider an 83B election. Finally, you may want to consider large charitable gifts or potentially inter vivos gifts to family members if estate and gift tax planning is part of what you're thinking about. So, finally, how do we get more out of our CPA? Here are some key questions to start with. Well, one, do you offer year round tax planning? Start with that. Do they know? If so, what does that engagement look like? Is that a separate engagement? Will you still be working with that same CPA, or is it someone else in their firm? Ask if you can schedule mid year and year end reviews to be more proactive. Next, what do you need from me, the client, to do that planning effectively? Finally, how can you coordinate your planning with my financial advisor and my attorney? Next, you're going to want to understand what you're paying for. Again, planning is a value added service, so it may cost you more if it's not already included. But if it's going to get tax results for you, then that planning can pay for itself through better strategies and fewer surprises. You don't want to expect premium service for only a 1040 price tag. Again, make sure you know what you're getting and what's included. Watch out for some red flags. If your CPA is always responding with things, well, we'll know when we file, that's going to be a problem. Again, they're waiting until the end and not looking for things for you to do proactively. If they're unwilling to meet before December, well, they're not really set up for planning. This is something that should be happening a few times through the year, depending on what your schedule is and what your particular circumstances are. Again, a planning CPA, a tax planning CPA who's thinking about things like this will have certain guidelines on the cadence of those meetings. Finally, if they can't explain the why behind your tax results, then it may be time to reassess the relationship. So, where is this going to show up? Well, in estate planning, we're looking for long term planning that allows for both smarter Roth conversions, charitable giving, potentially wealth transfers. These strategic timing of this can reduce your taxable estate for estate tax purposes, which provides more assets to your beneficiaries later on. Finally, this well coordinated plan can avoid costly surprises or missed opportunities. Having a business that does better than you expect is always great news. Having to write the surprise check to the IRS before you were ready isn't great. When we turn to probate, well, without planning, your beneficiaries may inherit tax heavy accounts without any flexibility. Sometimes there are better ways to do things, such as leaving IRAs to charitable beneficiaries instead of individual beneficiaries. Why? Well, by routing it to a charity, we're not going to have to pay income tax on the assets in that IRA, unlike an individual beneficiary who will. Next, executors can't unwind poor planning after the fact. They're stuck with the hand that you've dealt them. If they don't have records or coordination, it often means that things are going to take slower and it's going to be a messier administration. So, pulling it all together, getting tax planning from your CPA isn't about waiting for magical advice. It's about being proactive with them. So, start early, ask directly, and be ready to share the information they need so that they can invest in the process alongside you. The more engaged that you are throughout the year, the more value your CPA can deliver. Thanks so much for watching, and we'll see you next time. If you have any tips or things that have worked for you in the past, go ahead and let us know in the comments below.